Today I want to go over a soybeans trade that I just closed. Had about a 44% annualized return on it, which was not too bad. It's within what I'm looking for on the members portfolio. I'm looking here at a weekly chart of soybeans. It's been a while since I've drawn weekly trend lines here, so I'm going to go ahead and do that very quickly just to let you see kind of how I do my trend lines. I do extend them because I have found that over time they tend to come back in play. And you'll find support from really old trend lines. I had it updated on my other system, but I haven't updated it in this one, so I'll go ahead and do that very quickly so I get some support and resistance. Looks like we have pretty good price support here. On these price supports like this, I typically don't extend them too far. It's just that regular trend lines that I extend. I use the dotted lines so that I know the difference between my weekly and my daily trend lines. So what we have here is we're looking at the weekly chart of soybeans, which is typically where I start before I enter a trade. And what I did on 2/16, I went about 64 days out, and I sold this call up here about 1750, and I sold the 1390 put. That, I believe, was about a 3 delta when I started, maybe a 4. And I entered on this weekly candle right here. And I'm going to switch to the daily candle just so you can see what happened after I entered this trade. Let's zoom in a little bit. So I entered the trade right here on 4/16. Looked like a pretty good area. It pulled back in. It actually had hit a alert I'd set for a pullback into this area for me to enter a trade because I wanted to get away from this extension. So I entered it. Everything was going fine until really about right in this area. And when the bottom fell out here, because it fell out so quickly, it actually put this trade at a loss. It wasn't at my stop loss. In fact, it got a little close to the stop loss I have set for these, but I still had some room, and then it recovered as it went back up, and I was able to get out of it. But you can see we did find support right here at the 200 on the daily, and we also had this trend line, which this actually became support, but it came from back here. These are weekly trend lines. Again, I typically use weekly trend lines as opposed to daily trend lines in my trading. A few exceptions, if I've got some kind of channel forming, a lot of times I'll draw that on the daily. But overall, I prefer the weekly trend lines when I'm trading. And most of my tradings, like strangles especially, are longer term. Let's switch to the actual trade sheet. This was the actual trade sheet. So I entered it on 2/16. So I had a target close of 3.9. I try to evaluate these trades at about 21 days. And the reason I do that is because, again, I'm trying to get a certain amount of weekly income. Now, this is just the trade that I had put on the members portfolio. I actually had more contracts than this in another account. I trade multiple accounts, some just that I keep up with what I'm doing on the trades that I post, and then others are my personal trades, which typically have a lot more risk. And I don't always, like a lot of my ES strangles, for instance, are done in my personal account. There aren't ones that I put out for others to follow, just because of the risk involved. It takes a lot larger account to do those. I may post those just as informational type things if you want to follow them, but I don't. They're not part of what I try to get people to do because of the higher risk and the higher buying power it uses. Had a buying power of about 3,000. That ended up about right because as it went down, it actually did push up to the 3,000, maybe even 3,200 range on as far as the amount of my buying power that it used up. I could have stayed in this trade. I think it's still a good trade. The reason I closed it, one, is because it was at a loss for a while. And typically, if I have trades that go to a substantial loss, then once I can get where I can get out at a decent profit or even break even sometimes, I'll go ahead and close them because I've already lost a little confidence in the trade because it moved different than I expected. Here, I closed it for that reason. I also closed it because I'm still trying to hit my weekly income target. And this was the oldest trade that I still had open of the strangles. So I went in and closed it here, made $72 in 20 days. It's about a 2.43% return on the buying power that it used, or a 44% annualized gain. It's a good return. You could stay in it if you're not and still shoot for that 50%. return, which is what I typically set my initial target as, about 50% of the credit. You could stay in it. Again, I have my own reasons for getting out. Again, going back to my weekly income target. So overall, it was a good trade. If you have any questions, let me know. If you like this video, please go ahead and like it and subscribe to the channel, and we'll talk to you next time.